Hello and welcome back. Episode 71 of the Pickers Market. Yep,
It's great.
yep. The OG crew back together. Keith,
Mhm.
Kyle, Tyler, and Lisa is trying to host again, for good or for worse. Second
You must
week
have
in
done
a
such a
row.
good job last week.
Yeah,
that
Back
you-
to back.
something was mixed up in this schedule, I believe. But
that must have
anyway,
been
we
me, the
take it.
schedule master.
Keith was like, I don't feel like doing it.
Right.
We'll just throw
Let's put
Lisa
another
on.
name in it. So yeah, let's get started with the traditional by now, two truths and a lie. And I thought as we are slowly shifting into soup mode and crisp air and all of that, that we do a fall edition.
Nice.
Two truths and a lie fall edition. So I hope no one cheated.
Feels like it outside today.
Mm-hmm.
Yeah. Yeah.
Got cold.
It's really getting, and when you kind of look at the leaves, it's
Mhm.
yep,
Oh,
starting.
sad.
Anyways, so first truth or lie, the Nasdaq's largest daily percentage drop occurred during the burst of the dot-com bubble. B, Black Monday, which was on October 19th, 1987, remains the largest single-day percentage drop in the S&P 500's history. Or C, Lehman Brothers filed for bankruptcy in September 2008, marking an escalation of the global financial crisis. Let's start with Tyler today. Let's switch things up. I always pick on Kyle first.
Yeah.
Yep.
I mean, Nasdaq largest daily percentage drop. I mean, tech was Nasdaq around? It was. When was the Nasdaq started?
Oh, boy, I don't know, but it was around.
It was in the mid 90s because
Yeah.
QQQ came out, I think, in 97 or
Okay.
98.
Okay. I didn't know if that was gonna be a trick question.
I want to know why
Um,
these are so negative, Lisa. That's my big question. But
fall
anyway,
edition, you get it?
yeah, I get
Yeah,
it.
fall. Oh, that was good fun.
I could go with Black Monday just because I'm sure there's something like back in the 30s, like Great Depression, where the market probably had a bigger drop.
All right,
Okay.
So I'll go with B.
B, Keith.
that's a good one here. I think A is correct. B, I can't remember if it was the S&P or the Dow. I think it was just a Dow. I don't think if it's, and then Lehman I think was in September. I'm going following suit with Tyler. I'm going B.
Perfect. Kyle.
I'm also going to go with B.
Oh my God, it's my day today. I
What-
got you all.
What is it?
It's A.
Oh,
Is
is
it
it really?
Nasdaq's largest daily decline was not the dot-com bubble, and I
Hmm.
thought I got you with that.
Mhm.
It was during COVID.
Oh, was it really
Yes,
during
yeah.
COVID?
Uh-huh, Yep.
Really?
Yep.
There we go.
Yep.
That's
I
a
would have
fun
never
fact.
guessed that.
Nice
You
job,
can
Lisa.
fact check me, Tyler.
What was the percentage difference?
Well, I have to look that
Because
up.
there's circuit breakers now, and they're
It
guess
was
there
a
were-
difference. So it was significantly
Yeah.
more.
Oh,
but
Maybe
it
the dot-com was maybe over every day. It was probably like that 3-5%.
yeah,
wasn't
yeah, I could see.
Yeah.
8, 9, 10,
and
12.
COVID. I don't know,
whatever.
March 2020. I don't know
Mhm.
which day
Yeah.
exactly.
Hmm.
I have to look
We'll,
it up.
we'll
I'm
have to
sure.
follow up next week with
Yeah, but I thought I
fact check.
got
We're
you
gonna
with
fact
that
check
one.
this one.
Nice job, Lisa.
Anywho, Tyler does not believe me. It's starting good today. Anyway, switch to our hot button topic today, because we are entering the spooky month of the stock market. We already had it with our intro. That was pretty spooky. And September is traditionally or historically the worst month for stock performance. So all major indexes the averages are negative straight through. And October is not the worst in performance, but the most volatile. But also interesting enough, the stretch between October to December, so the 3 months, are usually the strongest one of the year. So what do we make with all of that information? Tyler, let's start with you. And we start with the September effect.
Yeah, I mean, I think if you look at averages, it's the worst. Median, I was looking at it yesterday, like median, you're down like 0.1%, right? So like, yes, you can have some pretty terrible years in there, but generally speaking, it's really not that bad. But
Was there any other month that was down though? And then
I mean, it
median?
depends on your time frame,
Yeah,
right? Like,
that's true. I looked at a couple.
if you
different
do
things,
10
too.
years versus 20 years, you're going
Yeah,
to start to
yeah.
get some, like January is actually a bad month. February is not that great.
I saw a chart actually with like the last 50 years, the last 20
last
years.
50, 20 years.
And
Yeah,
it
so
was-
like you can slice and dice it, but generally speaking, September is the worst. I don't know really what the reason for that is. I guess people coming back and last hurrah after Labor Day and start trading again and repositioning portfolios. I really don't know you would think with more volume relative to summer months that like summer months would be bad and then September would be good with just the sheer volume that comes back. But I really don't have any good answer for that.
To follow on that is, I mean, just because you have low volume doesn't mean markets have to be down, though, right? So that I think that's I'd flip it and say, I think historically, I think less so recently is, years ago when there wasn't everybody 24/7 online trading, that the big money managers, the people that actually drove the markets, were on vacation in summer.
Mm-hmm.
Literally, they would go to the Hamptons or wherever on the East Coast and take their summer, basically, especially August, off. And I think it was not a whole lot got traded. I think the volume was probably down, and I think it's kind of steady Eddie kind of go. And I think it was kind of a glide path up, creep up, and then I think when they came back, it's like, okay, let's take some profits here. And the other thing I would say is maybe historically is start of the year, everybody comes in the year optimistic, saying, okay, let's buy stocks. It's going to be a good year. And on the other end, to your point, on the Q4, you finish the year strong, right? It's like, okay, we'll rebound here. And so obviously you need some kind of in between. If that's the thesis, you need some month in between that'll be down in September.
And also there's
could it be people are starting to roll estimates out to the next year in September, like you're starting that roll period?
That, and you got mutual funds that the tax, that when we were, I guess when I ran a mutual fund, October is kind of the fiscal year end. You would do trading in September, and that may be some of that tax loss. You sell some of your losers there to offset some of the gains that you've accumulated.
But what don't you think that with more significant, more weight in the ETF world now, where it's different, would you think that this effect kind of, if that is the reason for it, if that effect kind of fades a little bit out?
I would,
mutual funds versus ETFs,
I think as more people
not
get
so
more
significant anymore.
If you're going with that, the fact that people are gone, coming back to it, I don't think that's the case. And ETF is obviously, a lot of these names are in the ETF world, but I do think if the barbell, if you start out strong, you're gonna have some lull. Maybe it just happens to be in September and you finish strong. So I don't know, Kyle, any thoughts on?
I think it's probably a self-fulfilling prophecy of
people expected.
Yes, the expectation, the historical seasonality to it. I think the rise of retail, which we've kind of beaten to death here over the last couple months, I think that does change it too. But usually retail investors are a lot more, they seem to be more interested in technicals than perhaps institutional traders and investors.
So you would not think that?
I would think that they would lean into that more and look ahead to say, this is, September is historically weak. We're going to go ahead and take advantage of that, and which probably exacerbates the moves. So I don't think it necessarily goes away despite the shift from mutual funds. And I could totally see that, because when I was part of mutual fund living in my prior lives, I mean, that's what just would happen. I mean, fiscal year end for a lot of those companies are end of October. So you're kind of setting up for that, and makes sense. But I don't know. I don't know what the cause is, but I don't necessarily see it going away anytime soon.
Yeah. The causes are like, these are just ideas where it could come from.
Yeah, there's no hard facts saying.
No hard facts that this is the reason. Yeah. But it's just interesting that.
What's the sector makeup? Do you know? I didn't look at that. Like, is there a loss leader? Does anybody know?
Well,
like,
just looking at, so I've got it pulled up. So like, if we look at this, like, sorry, I don't have it on the screen, but it seems like the times that you have a really bad September, it's like the bottoming out process in a bad year, right? Like, so looking at 2000, 2001, 2002, down 5, down 8, down 11, right? And then the market starts to rebound from there. So it's like, this is like the one period where it's like just flushing it out. You're taking to your point, you're taking your losses, right? And then you're probably maybe sitting on a little bit of cash or buying something else or rotating. But
sorry, this is S&P.
Yeah.
Okay.
So then after that, there's really not a bad September. And then you go to 2008, down 9.1, right? Not necessarily the bottom there, but you get some of that flushing out. And then 2010, and you go all the way to 2020, 2021, 2022. Like 2022 was that was the bottoming. 2021, I think, was just a good year, right? And I think you start taking profits there. Same thing with 2020. You come off of the COVID lows, coming out of summer. Like August was up 7% in 2020, so probably just some profit taking there, right? So I think I don't know if there's anything to it, but it seems like that's like the September is the month for the bottoming process in a market pullback in a bad year. And just based on like what the numbers are showing.
And also I could see, just looking from COVID to now, 4 out of the last 5 years were down. So, what's the average? Down 6% on average, if you include that outlier in 22.
Yeah, that's a pretty significant move, right?
Down 4 on average.
With 24 is positive.
Yeah, including the plus 2% in 24.
Yeah. But I mean,
that's interesting.
I could see people getting a little squirrely looking at that and saying, I'm gonna take my chances on leaving money on the sideline, or shorting, or inverse triple leverage.
What do people say? Markets don't repeat itself, but they rhyme. Yeah, something like that. Right. So maybe that's
which intensifies the effect then even more, and then it becomes, like you said, to your point, a self-fulfilling prophecy, rather than a whole other real reason behind it.
I mean, the bigger takeaway is like, okay, now we just talked about it's being down slightly worse than some other months. It's hard to play that timing game. So do you really want to tell your investor client base saying, oh, we're going to sell because September, but we're going to buy back in October, but we're going to hope October isn't one of those scary months as well. So we're really going to wait till November. It's too hard to do. It's just not realistic. Now,
if you're wrong too.
Yeah, if you're wrong, then it looks really
last year
bad.
You've been wrong.
Yeah.
Right.
Well, I think what we can do as individual portfolio managers is look at inside the portfolio. And if there's names maybe on valuation that are extended, things like that, it's like, oh, seasonally is kind of a slower time of the year. Maybe you can, tweak things that way, but I certainly wouldn't make an overall allocation change based on supposedly the September effect.
So I guess that's a mistake maybe investors could make, right? Getting out in September because of that, sticking out for October because it's volatile as well, and it can go either way. So spooky as well. And then I don't know if November is when the re-entry point is, and then you probably missed the last 3 months, which are historically the best of the year. So you kind of maybe want to miss out on a lot of.
Yeah, you got these different adages, what sell in May and go away. So
right.
Certainly doesn't really fit. I mean, it's a whole different thing, right?
Yeah.
So it's, I don't know. It's hard. It's interesting, but certainly because the media was certainly talking this up quite heavily yesterday. I think part of it's because, it was, last 2 years, 25% plus the S&P. This year we're up, I think 10, almost 11% going into September. And we had a little bit of a sell-off yesterday, but we'll see.
And that's the thing. That's what I wanted to mention as well. When we look at yesterday, which was the first trading day of September, it was not the best day, right? It was a lot of volatility. So there might be truth to it. That the markets kind of braced for September, which is only one day, and it was the start and it fitted the theme basically. But also compared to last year, September, it was kind of similar topics. It was fear of what the Fed might do, which now is again, right? They are meeting in 2 weeks. Are they cutting or not? Last year was kind of a similar situation. There was a labor market, job market scare, which we have again, because we will see another job report on Friday that I don't know what it will tell us yet. So it's kind of similar topics than last year.
Was that when the restatement was last year, the jobs right before the election, or was that a little later?
Well, so they do an annual revision. I think it comes out like September 15th.
Somewhere in September.
Something like that. It's not on the jobs report date.
No, I know. But I think it's like or something.
Yeah, it's like September 15th.
Was that when the jobs kind of people were, that's probably coincides what you're talking about.
The other thing that I'm thinking about too, though, isn't Congress's recess over starting September? So that political noise
comes back,
right? They've been away for a month. You haven't had much of that. And all of a sudden people come back with agendas and trying to push
fresh energy that you.
That I thought maybe you're implying that they're selling all their winners at the.
Well, that could be too.
Probably are.
But like the budget deadlines are always October, right? for government. So you get right because now yesterday that not only you had tariff news, Fed news, or concerns, but then you had government shutdown.
Yeah, that one surprised me. We were talking to that political guy yesterday.
So could that be you just start getting political ramp up again and agendas flow back in, and all of a sudden we get through September and nothing really gets done like usual, and it's status quo.
If that's the case, maybe they could take a longer vacation.
Yeah, another potential reason here. Political going back to work, which feeds into the back to work, back from vacation thing.
I don't know, just throwing something out there.
Yeah, but just to talk to touch on it because it rhymed with last year's September with the topics and kind of why it sold off in the beginning of the month. But also I think this job report kind of is very much watched more than anyone I think before this year, because we had like huge revisions the last couple of weeks, which also resulted in the ousting of the chief of the ministry there, and what is it called exactly? BLS, yes.
Bureau of Labor Statistics.
Yeah, right. I
like the ministry better.
Ministry. Yeah, whatever. I couldn't name it. It was on the tip of my tongue, but I was like, what is it called again? Anyway, so it's like, what are we expecting? Will it scare us after what we saw the last couple of months? That also the Fed kind of maybe looks at it a little bit differently now, because we had so much revisions that maybe that changes the game a little bit.
I feel like this year is a little weird too, because there's so much riding on it, right? It's almost like people want it to go badly just to lock in the rate cut. You know, I mean, the market's already positioned for that, and also if it comes out going gangbusters, I would imagine the market will be down.
Market down, yields back up.
Right.
Yeah.
Which is so weird. I just had the conversation with someone yesterday. It's like everybody's kind of hoping for a soft, labor number, which is not really great. So then rates come down. So it's a fine balancing act, which again, the funny part is I think if it's a strong number, more jobs added, market probably sells off, which is like, because we're always on this, me always talk about people are working, they have money in their pockets, they love to spend, drives the economy, right? So you want more employment. And the market right now is in the point of a little weakness is probably good because they're cutting interest rates, which is eventually probably a better driver for the short term.
What is that? Is that Schadenfreude? Happy that it's bad.
I mean, if you think about it though, like the companies that are, I mean, I guess yes and no, but the companies that are driving the market right now aren't necessarily consumer facing. So
or interest rate plays per se, right?
Yeah. So I mean, if interest rates do come down, it's actually a net benefit for the big guys. I know most of their funding comes from straight up from their cash flow, so they don't necessarily need the debt. But for years and years, Apple never had debt and they just had cash to just spend. And then interest rates were so low that they started taking out debt, right? So it allows these companies to fuel this CapEx growth and maybe even pull some of it forward with lower interest rates if they want to take out debt to do so. I don't know. I'm just throwing something out there. So if rates do come down, it could be a net benefit for the market, regardless of how weak the economy could get.
I think it benefits the smaller cap, mid cap is where that's the bigger benefit, right? I think you see more of a spread if rates stay higher, that the large cap guys are such cash flow positive, don't have to worry about borrowing costs. So I think that's where you're starting to see a little bit of the breadth, which we're starting to see these small caps really. We always have this conversation: is it real? Is it not? I mean,
is it finally the time for a company?
I think you have to. I mean, that's a whole another discussion. I think you have to worry about if rates are coming down because the economy is slowing. Is that necessarily good for small caps? You got to worry.
That's where it's hard.
That's right, because then you have to re-accelerate for them to actually work. And if you stay soft, then you're gonna want to run back to the big guys. So,
but theoretically, if the Fed brings rates down, it allows those small companies to continue hiring and spending,
refinancing,
and then
all of that,
refuel the economic growth, right?
So that's where the bull case is
So,
for 100%, right? You worry
So it's
if
like
it
you take some short-term weakness to get the interest rates down, and then let the economy ramp after that.
Yeah, you just worry that if it's too weak, then those small cap companies don't
do well.
Can't make it, right? And you struggle in an economic slowdown. So,
anyways, there's for sure a lot in the pipeline for September that could brace for either or outcome, right?
for sure.
Anyway, just to touch on October as well. So we had the September effect, and the October effect in comparison is doubted the most volatile month of the year, not necessarily the worst. And it had some of the most dramatic single day market moves in history, like 1929 crash, 1987 Black Monday. We talked about this earlier. 2008 global financial crisis, like the panic days there. Do you think all of that, because it coincidentally or not, whatever happened in October, that this kind of changes the statistics a little bit here, and that it draws, because of that couple of days, it's like, well, this is the most volatile month now, but it's just because of a couple of bad years that coincidentally happened in October. Kyle, what do you think?
I think it's probably just a couple of bad years, but that sets the stage for, psychology to take over.
Yeah.
Yeah, it's weird that those big down happen to be in October, right? They could have been in any month, but I don't know if it's an anomaly that happens to be in October, but certainly, again, the September, October kind of gets investors uneasy, and maybe it's self-fulfilling, and we're kind of going back to the same question now. October is a little more volatile because those big down days, right? And it's interesting. I mean, then you get as bad as October is, Q4 is good, so you get October, November, December, right? So it's like, even with some of these drop-offs, again, I think if you took out those couple, 3 big drop, I mean, you hate to do that, but it's like, it's probably a lot less negative, right?
So it draws down the whole month, basically.
Yeah, but the quarter still remains strong. So it's like, okay, so is that to the timing question? It's like, okay, as an investor, you get out September because it's bad. Then you worry about a spooky October. And then when do I buy? I got to wait for a 10% drop in October, which doesn't only happens 3-4 times in a deck or 100 years. So it's like, okay, that's not your buy signal, I wouldn't think. So just interesting that we're getting into this season of changes.
Exactly.
Well, it's almost like September is the beginning of your correction, right? The beginning of your drawdown, and then October tends to be that bottoming month.
Yeah, like
2022, S&P bottomed like October 7th, right? Something like that.
Yeah,
I don't know. Like, is that you flush everything out? October bottoms, you still have all the noise, and then you start looking towards out years, saying everything's going to be fine. Corporate earnings are still strong. We've got, the Santa Claus rally coming up here in December, and market starts to bottom. I don't know.
I think that's what in October, you start seeing a lot of Q3 earnings. So I think that could be the clearing event if you were in a kind of a down bottoming process. Things aren't maybe as bad as what investors are perceiving. Companies come out and say XYZ, and then Santa Claus rally, I think is.
Yeah.
I think that's of all the ones that we talk about. I think that one's
really.
one that's probably a little more. December seems to be strong. I think it's just the optimism of finishing the year strong, start the new year.
It has a little more merit than the others.
At least mentally, I think it does.
When you get December is also when you start to see like consumer spending really ramp, right? The expectations of, every family's going to on average spend $1,050, and all of a sudden spending comes in at 1,300 or something, right? Like, so then you start to get that lift at the end of the year, just because you realize that consumers are still spending regardless of all of the noise.
This year it'll be, and we had 1 quarter of Q2 with full tariffs, right? And then there's all the noise of now the whole tariffs, whether they're legal or not, right? But come Q3 October, I think you'll have a pretty good sign of what companies are doing. You'll have 6 months of real tariff impact on their business model and what can happen going forward. So I think it's going to be an interesting next few months.
When you're going to start to see the longer we have these too, the more you'll see how much of the pricing actually creeps in to consumer prices as well. Like how much of of the tariff are consumers actually taking, not just on the corporate side.
Yeah, Goldman had a note out the other day saying so far it's been like 25% that the consumer.
But then, like,
and then
by October,
by October
it's like
60
65 or something.
So,
Yeah.
that was interesting.
Yeah. Anyways, will be for sure interesting month. There's a lot of topics ahead.
Do we want to touch on that, like tariffs and the potential, like what the impact of that could be if
I think that's a full
the
episode.
U.S. government has to pay everything back?
Full
Okay.
episode.
Yeah, you think that's actually we'll save that one.
All right,
That's
we'll save
a
that
long
one.
discussion.
Mhm, definitely.
I had it yesterday with somebody. You can get into some rabbit holes on it. So
Yeah.
Companies would love it.
maybe not.
Hmm.
Stay tuned for next
Stay
week.
tuned.
Stay tuned. I guess that's a teaser. We never did teasers,
Wow, there
but here we go.
There's our hook.
Experience something new. Anyway, I wanna switch to something positive to end today because it's fall. So I thought we'd do another spaghetti wall again after we were discussing so much the last couple of episodes that we couldn't do it, and end on a fun note. So fall, it's not officially fall yet, but who cares? It's
It feels like it.
It feels
There
like
you go.
it, and yeah. So summer is definitely over, especially after Labor Day, right? That marks the end. Pumpkin spices everywhere. So I want to ask you if any of you have some guilty pleasures fall related, like sweets or pumpkin spice lattes, or more some weird stuff, or more like the traditional.
You should start with Kyle.
goodies.
Start with Kyle
Kyle
on this
is
one.
smirking
'cause
already.
we were just talking
He has
spicy
something good.
lattes last week.
I was going to go a different direction because pumpkin spice latte is not my favorite, but I do make a pumpkin cheesecake, homemade one every
Oh,
year.
I like cheesecake. I never had that combo.
Yeah,
No.
it's fancy. It
Well,
takes a
Kyle-
long time to make.
Does
It's
it
like
really?
it's like 8 hours to
What?
make the thing. Yeah,
Jeez.
most of it's cook time because it's like
Yeah.
you have to make a
8
water
hours.
bath for it. You know, you got to get
What's
it
a
the
water
right-
bath?
Wow.
Back up. Back
Yeah.
that up.
Okay, wait. We
Yeah,
have
so
to
you get a
dissect this.
spring
Isn't
form.
that just a bath?
Yeah.
No. Yeah, you get it comes in a
With
spring
the
form pan,
pumpkin.
where you get the little lever on it so it pops off.
Oh,
Have you ever seen those?
Oh, yeah. Okay.
Yeah, 'cause
I know what
otherwise,
you're talking
you
about.
know,
Yeah.
you
How
can't-
do you get it out? Yeah.
Yeah, how do you get it out of the pan? So, but yeah, so you mix it all up with the cream cheese and the pumpkin and the all the ingredients, and then you have to put it through like a very fine sieve so it's completely smooth. Like you don't want anything in there. So then it goes in the pan, and then the pan has to go in a roasting pan, like a deep one, not like a cookie sheet. But like you put water in it, and
Another water bath.
that's the water bath.
Oh, that's the water
So
bath.
you literally take hot
Mhm.
like a quart of hot water, or like, I don't know, 140 degrees, and then you put the springform pan in the
Wow.
roasting pan. You put that in there, and then it goes in the oven at like 250 degrees, or 225, I think, for like 4 hours.
What?
4 hours.
Yeah, it's like a
That's-
really long period
Well,
of time.
I think our listeners are so intrigued now to hear
Write that
a
down.
little taste test that you have to bring one in,
I
Well,
might,
so we
I
can
might,
talk about it
might
in the
Well,
have
next
to.
episode.
Kyle's corner of on cooking. I know
Yeah.
it
Right.
sounds.
Yeah.
I'll put the Julia Childs
Right.
on.
We have our own Martha Stewart
Mhm,
here, it
mhm.
seems. now.
Yeah, I only make it once a year. The kids like it, so
Well, yeah, that
Yeah.
kind of time frame of efficiency is like,
Yeah.
oof, that's way too
It
much.
takes
Yeah,
a
I wish
long
I had
time.
those kind of
mhm.
skills.
Well, I'm surprised by that revelation.
Yeah, write that
Okay.
down.
I don't have any, so after that, you might go right to Tyler. Maybe he's got something.
He set the bar high.
Yeah, I don't have any. I don't like spicy latte Starbucks. I've had it once years ago, and I like pumpkin pie.
Mhm.
That's about
Mhm.
it from the pumpkin standpoint. But that's a Thanksgiving thing.
Just a simple man.
Yeah,
Mhm.
just a simple man. Just a simpleton.
I don't mind a good pumpkin spice latte every now and then. But the only thing that I really do is bake pumpkin bread. That's about it.
Mm.
Aren't you a chili guy in fall? I mean,
Yeah,
it doesn't
I
quite.
mean-
No, it's not pumpkinish, but that's a fall.
No,
kind
I mean, yeah.
Mhm.
Doesn't everybody do chili in the fall though? Isn't
Mhm.
that just like a
Again.
common?
Well,
thing?
what kind of chili are you doing? All
There we
meat
go.
or meat and bean?
Oh, now
or
we
what
go-
do
here we go
chicken?
again.
What do we do?
Yeah.
Green?
Yeah, what do we
Regular?
got?
Try and switch it up every now and then,
Do you?
so it's not just beef.
Yeah.
But
We've got a really good.
Oh,
chili
more food.
recipe.
See, yeah.
Well,
Look
more
at
food
Kyle.
for us, I guess.
Kyle's
today.
corner is
I
coming
should
in.
bring it in. Well, we're doing up at the lake in 3 weeks. We're doing a fundraiser for the fire department.
Nice.
And so we're doing a 5-alarm fire department,
Yeah.
chili cook-off. And so I've signed up, and we're doing, it's like an all beef one. There's no beans. It's just straight.
That's where I grew
meat.
up. Yeah.
And it takes like 3 hours to do too. And you add the seasonings every hour to keep them going.
So good.
And then it's really good. So
how about you, Lisa? What do you got?
Well, I cannot keep up with you guys, it seems.
Just a straight Starbucks PSL for you.
No, not necessarily. So not the typical pumpkin. I mean, I don't mind like every now and then. I'm not a sweet coffee drinker. I drink it usually black, so I do not like all the spices and all the syrups in there anyways. But I'm more like the soup girl in fall, right? Like pumpkin soup or all of that.
Pumpkin
like,
soup? What?
Yeah, cream soups.
Interesting.
It's pretty
Squash soups.
Yeah, that's what we are doing in Austria more. We do not really have the pumpkin pies.
Yeah.
Or the pumpkin spice lattes. That's what we are actually doing with pumpkins. I put it in soup or stews or something like that. So I do that, but that's probably it. And it's pretty boring.
You don't decorate the airplane to look like a ghost?
That is actually a good idea. It already looks pretty rough, so I do not need much to make it look spooky.
Tell Mr. D you got an idea for him.
I got an idea. We need some big bed sheets and then cut out like eyes over the windows. That's actually not a bad idea. Anyways, I try what to make out of it. Yeah. I think that was
that was fun.
Yeah.
I learned that Kyle's a big cook. That's awesome to know.
We do Kyle / Martha Stewart's baking corner up from now, I guess.
Yeah, we'll have to change the spaghetti wall to Kyle's tips on cooking.
Exactly. With that, like and subscribe, and see you next episode next week.